Hello everyone and welcome back to another video in this channel Cinema Trading Wars. Thank you so much for the support I've received in the past few days. I really appreciate it. And we are back on another video here today talking about what happened yesterday on the economic calendar of yesterday. So we've seen many news coming out yesterday from the interest rate decision, also the FOMC press conference, FOMC statement, and last but not least, good oil inventories with the conditions we have in this market. So, as you see in the title of this video, FOMC shocked the market. Here's what come next. Yesterday was one of the most those days that looks normal on the surface. But if you really understand what happened, it actually changed the entire short-term direction of the market. We had the FOMC decision, we have the Fed speaking, we have interest rate outlook shifted, and oil data adding fuel to the fire. And the result, we've had confusion, volatility, and a shift in expectations. So, in this video, I'm not just going to tell you what happened, I'm going to explain what it means and what smart money is likely doing right now. So, before the FOMC, the market had a very clear narrative. Inflation is coming down, the Fed is done hiking, and rate cuts are coming soon. That was the story. And markets were positioned for easier policy, lower yields, continued risk on sentiment. So basically, everything was priced for a smooth landing. The key line was the market wasn't trading reality, it was trading expectations of a perfect scenario. So, what did the Fed actually do? They held rates steady. No surprise there, the market already expected that. But here's the mistake most people make. They focus on the decision instead of the message. Because the Fed didn't just hold the rates, they shifted the tone. So what changed actually? The inflation outlook was slightly higher. The economic growth is still strong, but the uncertainty is still rising. So there's a strong insight here. This is not a Fed that's ready to cut aggressively. This is a Fed that's still worried. Now, let's talk about the Fed it's himself, because this is where the real signal was. Instead of giving clear guidance, he leaned into uncertainty. He basically said, "We're watching data, oil is a risk, inflation could be sticky, and we're not rushing anything." And so the key line is, this was not a dovish pivot. This was a wait and see Fed. So the market interpretation was that before the cuts are coming soon, but after we can see the cuts might be delayed. So the strong line is while the timeline shifts, valuations also shift. So how did the market react? The stock drops, the yields moved higher, and the dollar strengthened. Why? Because the market was positioned one way and the Fed forced a repositioning. So markets don't fall because of bad news. They fall when expectations are wrong. So this is what we call basically economy, a positioning unwind. So let's talk about oil now. Let's talk about the hidden driver behind all this. So what happened? Oil prices are rising due to geopolitics. The inventories increased sharply. So you have two forces, supply data, which is bearish, and global risk, which is bullish. So the key insight is this creates instability in pricing. And instability is what markets hate. This related to Fed. Why does oil matter so much? Because oil is an inflation driver. If oil keeps rising, inflation stays elevated, Fed stays restrictive, and rate cuts get delayed. So the strong line is oil is now controlling the Fed narrative. So here's the part most people are missing. The narrative just changed from soft landing plus rate cuts to uncertainty plus inflation risk. So what does that mean? Higher volatility, less confidence, and more selective markets. So this is where markets stop going straight up and start becoming two-sided. At this stage, institutions reduce the risk, rotate sectors, and become more defensive. They don't panic, they just adjust. So what should you watch now? This is what I'm going to cover in the next video, but we can still talk about here. We have four key things: oil prices, inflation data, and bond yields, and that's but not least Fed tone. So if these align, that's your big move, the next big move in the market. So the market is now data dependent again, but not narrative driven. So let's wrap this up. Yesterday it didn't crash the market, but it changed expectations. This is no longer an easy market. It's actually a thinking market. So if you guys have any questions, please let me know in the comment section. I would like to know, do you guys think the Fed will cut this year? And is oil actually the biggest risk right now in the market? So I would like to hear from you guys. You can just let me know in the comment section. I've had a really fun time recording this video for you guys, and I hope this is going to be helpful in your trading career. So if you would like to learn more, please go to the first link in the comment section, join, and then you'll find my WhatsApp where I'm going to help you a lot in your trading career. So if you have any question, you can just ask me directly on WhatsApp or in the comment section, and I will be happy to help you guys. So thank you and have a good day.